Montego Bay in Jamaica. I'm here for another day or two and on vacation for a couple of days, but I thought I'd come at you with a quick daily bites. It's our regular, normal Monday feature. So it's January 30th, 2023, and just wanted to share with you a couple of thoughts that I might have for this week. Of course, the next time we're going to be getting together on Daily Bites is going to be on Thursday, February 2nd, Groundhog Day, and a lot of things that are happening between now and then I wanted to talk with you about before we get the week underway here. So, of course, you see futures are down a little bit this morning, down a little bit less than 1% on the day. We had a big day on Thursday of last week, of course, and then we rallied up on Friday and lost a lot of it towards the end of the day. Now we hit some resistance levels on the S&P futures, about close to 4,100 on the S&P futures on Friday, and back down because I took a look at the charts, even though I was on vacation. Yes, I still look at stuff. So I saw we did back down quite a bit, and then again a little bit weakness today. What could we attribute that to? Probably a lot more towards backing off for the end of the month. We see a lot of window dressing going on. We do have a strong month of January, following up a really weak month of December. As far as I'm concerned, we still think the bear market is still on here, even though we've rallied above the 200-day moving average and stayed up there for about 4 or 5 days. That is a good sign if you're bullish, but still, I think that we're going to be probably trading in a range in 2023. Maybe the top side is about where we're at right now, about close to 4,100. Maybe the downside quite a bit lower, maybe about 3,400, 33, maybe even down to 3,300. We do have a busy week coming up here. We have a lot of big tech earnings coming out. We have Amazon, Alphabet, and Apple, of course, coming out with earnings. And don't forget the big Fed meeting starts tomorrow, and it'll be moving into Wednesday the 1st. I will be back home tomorrow night, so I'll be here around to pay attention to what's happening with the Fed, the statement, and so forth, and interpret that. So that's going to be an important meeting. Why is that? Because the Fed seems to be inclined to raise interest rates even higher. I don't think that the emotions and the hope that the Fed is going to back off on interest rates is valid right now. I think it's being priced into the markets, and I think it's wrong that the market should be pricing it in. But of course, I don't tell the markets what to do. Just basically interpret it and try and go with what the market is telling us. Right. Interest rates were on the rise a little bit last week. We saw inflation starting to rise as well too. But still, the markets went up, right? So we have to pay attention to what the market is telling us to do. Price action is the most important thing that we have to worry about when it comes to analyzing markets and making trades, right? So that being said, the Fed is likely to raise at least a quarter of a point, possibly 50 basis points, but more likely going to do 25 basis points because inflation has backed off a little bit when you look at the PPI numbers and the CPI numbers. Is it enough to get the Fed to talk more dovish? Probably not, and highly unlikely that they're going to come in with any dovish talk or dovish speak here. In fact, I think that what they're going to do is probably going to hammer it down, saying that they're going to continue to be vigilant against inflation, to fight inflation, keep rates higher for longer. I think that tone is going to cast a pall against the markets for a short period of time. And if we break below 39.90 or 39.94 on the S&P 500 over the next couple of days, it's going to set up a much bigger down move. We haven't seen volatility in the VIX rising very much at all, but we do see it up about 8% this morning. And if it gets back into the 20s, that's going to cause a little bit of angst for some people, worrying about the markets going down over the next couple of months. I think February is going to be a tough, difficult month for most investors and traders, unless you're playing both sides of the market. Now, that's where I want to talk about right now. So I think it's so important to have protection on at all times, even during weeks like last week when the markets were up. It's so important to have protection on at all times because there's going to be days where the markets are going to get whacked. And certainly Thursday morning looked like it was, or Wednesday morning certainly looked like it was going to be that way. We were down 60 handles. We did rally back. We had a nice rally on Thursday, and then on Friday popped up as well too. So I think that you have to err on the side of caution here. And even if the puts aren't paying off for you right away, you can still stay with those puts, because remember something: markets go down extremely fast. They go down faster than they go up. So if you have some protection on, at least you're going to pull back a little bit of gains off of those puts and alleviate some of the pain that you're feeling on the calls that you may be long. So take some money off the table. It's okay to be sitting in cash right now. This is an uncertain time and an uncertain environment right now. There's not a lot of reliability and not a lot of probability that the markets are going to go up or down either way. We are a bit overbought. The oscillators are in overbought range right now. We've seen some polls and some sentiment readings that are also in overbought territory. So don't be surprised to see more downside here. And again, if we get below 4,000 and to 39, I think it's 39.94, look for more downside, possibly down to the 3,800 level eventually. So again, we're still in a bear market, folks. That hasn't changed, and we will have another end of the month reading tomorrow. We'll talk about that on the next Daily Bites on Thursday. So anyway, have a great day, everyone. I appreciate everybody spending a little time with me. And here's a little bit of look of Jamaica there, the ocean there. We have one more full day here, and we fly back home tomorrow. So I'm here with Leanne and my kids. We're having a great time, and I'll see you guys all back on Thursday morning. Thanks. Have a great day. Bye.